will be in or out. Let's get the read from National Taxpayers Union President Peter Sepp on this. Peter, what do you think if it looks like it comes out that that isn't guaranteed? In other words, that deduction goes?
Well, I think that we have to take into account all of the factors of tax reform. It is on the table. You're talking about something around 43 million tax filers out of 148 million returns who currently claim that deduction. Most of those deductions being claimed are in an income band of between $75,000 and $200,000. Well, that makes sense because these are folks who are normally living in very high tax states that tend to levy very high progressive income taxes. The question is, would other elements of the tax reform plan make those folks whole so that they would at least be as well off now under the tax system as they would under the new one? You can design it that way. If you double the standard deduction, you take care of folks who might be just on the cusp of wanting to itemize, and they'll decide not to.
Right.
If you take the rate down low enough, especially for the middle and upper income brackets, that
in other words,
might
that it would offset
loss.
whatever you're losing that deduction. It apparently is the only, reading between the lines from Kevin Brady, it's the only deduction right now that's being considered revisited. Because the mortgage deduction apparently is going to stick around, the charitable deduction sticks around. Are you hearing, or do you want to hear, that this is an across-the-board substantial cut for everybody, or is it your sense that to pay for it, to make it revenue neutral, as many Republicans argue will ultimately be their goal, that it has to be watered down, and it will be watered down?
There will be compromises along the way. Now, we may very well see some kind of limitation on the mortgage interest deduction proposed. And here again, the same dynamic is in play. If, for example, you have a much, much larger standard deduction, people who are itemizing their mortgage interest might be encouraged to switch. That's the philosophy. It's important to remember that the standard deduction is supposed to be a placeholder for all of the expenses of life that you have, you can't get rid of, and you essentially have no choice but to pay them. Taxes from other governments is one of them. So again, it depends on the design of the system. We can't overlook the fact that state and local taxes are continuing to rise, especially in places that have big trouble with their pension systems, and they're finding ways to either pay for it or avoid the issue entirely.
If the corporate rate is lowered into the low 20s, not the 15% that President Trump wants, but they settle in a figure in the low 20s, it's still substantially below the 35% prevailing rate. That's the advertising rate. Not all companies pay that. Yes. The average is closer to 27 to 28%.
Yes.
But that does narrow the differential between a substantial cut and one with maybe less bang for its buck. What would you think of that?
I think we need to get it as close to 20 as we possibly can. Part of the problem is when we factor in, say, a 23% rate or a 22.5% rate, the politicians might be able to say, well, that's about close to what the rest of our trading partners pay. Well, you have to factor in our state and local corporate income tax rates, which add roughly another 5% to that total. So again, you're above the industrialized nation average if you're shooting at 23, 24% as opposed to 20.
All right. Thank you very, very much. It is a confusing mess. You helped straighten some things out. I appreciate it.